Hello, everyone, and welcome to this Overseas webinar. Thank you very much for joining us. Hopefully you can hear myself and Robert and see us okay wherever you're joining us from. My name is Sebastian Bampton, and I'm account manager at Your Overseas Home. Today, I'll be chatting to Robert Webb from Buchanan about the financial considerations you should think about when buying over in Portugal. It's great to have you all with us today, whether you're with us live or catching up on demand. Delighted to be able to help you realise your dream of owning a property overseas in Portugal. Today's session will be a maximum of 30 minutes, and for those of you listening in live, there will be an opportunity at the end to put your questions to the expert, Robert. If you do wish to ask anything, please type your query or your question into the right-hand side of the screen on the questions tab. If you do need a reminder of anything that we've discussed today, or you'd like to share it with perhaps a friend or family member, a replay will also be available on Your Overseas Home website to watch at your own leisure. So yeah, enough from me. Let's get started. So over to you, Robert. If you wouldn't mind sort of introducing yourself, giving us a quick summary as to who you are and how Buchanan can help our listeners today.
Okay, thank you very much, and good evening, everybody. A warm welcome. I hope you're going to enjoy this. I'm going to cover quite a lot of ground. Basically, principles and issues that you face when moving to Portugal, both as a EU national and non-EU national. Then I'm going to deal with some taxation issues, non-habitual residence, golden visas, and then finally some tax planning ideas. So don't worry, there's going to be quite a lot of content, but if you want the slides afterwards, no problem at all. Just drop me a line. So really on that, I'm going to kick it off. Right, here we go. Right, first slide, we have this gives you the corporate structure of Buchanan. We've been going for about 20 years now. We have offices in many countries, both in the EU and outside the EU. But the important bit is the regulation. We are regulated by CISEC, which is the Cyprus regulatory body for investments. That's the MiFID passport. And for insurance, that's the IDD passport. This is quite common now. Basically, pre-Brexit, it used to be UK registration, but everybody's come out of there now, basically because EU advisors can no longer advise in Europe. So a lot of people like ourselves have gone to Cyprus. But we are still registered in the UK, and that provides a great deal of comfort. We also have a tax contact in the Isle of Man for various issues. But another important kind of factor is that we are also regulated, fully regulated in America. Very few advisors have got that. So if there are any Americans watching, we can help you. Right, okay, this is just a little bit of background. If you can see it, it just shows you where we have our offices, Spain, Belgium, Canada, Portugal, obviously, USA. We're also in Malta. So we are very widely spread. We've got about 15, 20 advisors, full backup, full admin people. So you have no worry about solidity at all. Right, our services basically are those of a traditional UK IFA. So in other words, we deal with pensions, we deal with investments, portfolio management, financial planning. There's no rocket science in that. Those are very standard features that most IFAs would have. Right, so the first category would affect people who are EU nationals moving to Portugal. So EU nationals, that's obvious. So that's Irish people, French, Germans, whoever. And this is easy, so easy. You don't need a visa. You've got total freedom of movement. Ireland, you actually do need 6 months left on your passport. But the whole point is you can come down here, no visa. But you have to register if you want to be permanent. You have to register after 90 days stay. You get a registration certificate from immigration, which is called SEF. You have a fiscal number, which is a tax number. You need to show sufficient funds for retirement, and that is not a great deal, as you will see later. You don't have to purchase a property. You do need to get into the healthcare system here, if you wish. You can also have an S1, which you can get from your own country, which basically means that your own country, so France, Germany, wherever, would pay for healthcare here in Portugal. The stay certificate is valid for 5 years. Absolutely perfect. It's very, very simple. Right, now we move on to that not so simple stuff, which is the non-EU nationals. Okay, hang on, something's gone wrong here. Wait a minute. Yes, here we are. Right, now this goes into various stages. It does become a bit tiresome with all the paperwork, believe you me. But the first thing is you can take advantage of Schengen rules, so you can come down here as a UK resident, South African, American, Australian, whoever. You can come down here. You don't need a visa for 90 days. Okay? Very, very simple. During those 90 days, if you wish, you can contact your estate agents. You can start looking at properties. If you are serious and committed about moving, you'll need to get a NIF number, which is an income tax number here in Portugal. You will also need to get a bank account. Okay, relatively easy to get, but you would really need a lawyer, or preferably a lawyer or an agent, to get you the NIF and the bank account. Very simple. Next stage is you would, sorry, right, okay, sorry, got to go back here. Sorry.
You trying to go back, Robert?
Yeah, I'm trying to go back, sorry, here we go.
Which one is this one?
Yeah, okay, right. So once you've got your NIF and your bank account, you can put your own property on the market, and then you have to apply for either a D2 or a D7 entry visa, okay? It's a two-stage process. The first is to get an entry visa. Now, you get that in your country of residence. So in the UK, you pop along to the Portuguese consulate in Manchester or London, and you apply for the visa, okay? The critical things there really are a health cover. You will need health insurance. The visa lasts for 120 days. Okay, so once you get that, you're up and away. No problems at all. You can then visit down here for 120 days, and then you can move on to the next stage. Then, once you've done that, you can then make an offer on a Portuguese property if you wish. Okay, you'll need a lawyer for that. We can provide you with details of that as well. Next stage is obviously to arrive in Portugal. Now, this then would still be with your entry visa. But when you get here, you will then need to apply for the residence permit, okay? Now, for that, you need to show a minimum income requirement, and for a couple, that's only 12,690 euros. It's really not a great deal. So once you can show that, You then need to register with the local tax authority, financiers. You then also need to register with the National Health. You can, this is where it gets a little bit tricky, you can, if you wish, get your own health insurance. It's not compulsory. Some people may feel it's better to have it, some may not, but it's entirely voluntary. You do not have to have your own health insurance. As I said earlier, you can get an S1. Now that, for Brits, you would apply to your home country to get this. And basically what it would mean is that the UK authorities would pay for healthcare costs incurred down here in Portugal. Okay, and as I said earlier, it's also relevant and possible for other nationalities. So French, Germans, Italians, you can get an S1, which would enable your relevant government to pay for the health costs down here. It's quite a big subject. It's quite controversial in a way. So in other words, is it better to have private health care or is it better to be in the public health? The consensus is that for day-to-day appointments, consultations, minor details, minor consultations, stuff like that, it's probably best to get private healthcare because waiting lists are really poor in the national system. But for major expenditure items, big operations, allegedly, apparently, the public health, the national health, does provide a better service, but it's all a little bit trial and error. Okay, so the other one issue to consider for non-EU nationals instead of the D2 or the D7 is a golden visa. Okay, now there are numbers of ways of getting the golden visa, but the one I focus on is property. Basically, if you purchase a property outside the coastal areas of up to 500,000, you will be eligible for a golden visa. That 500,000 can come down in various stages to 400 to 350 to 280. In a way, it's quite reflective of the way things work here in Portugal. It's a little bit heavy, it's a little bit long-winded, but you do have the choice. Okay, so all you need then, obviously, once you've made your purchase, the application can go ahead. You need your ID, so in other words, your passport, you need a bank account, you need a fiscal number. You apply to CEF, again, the immigration department, probably take up to 3-4 months, maybe a little bit more. It's quite a long drawn out process. But the benefits to you really are that you only need to be in Portugal for 7 days in any tax year, okay? That's quite attractive to a lot of people. So it's really very much an individual thing. You've also got family reunification. So in other words, the golden visa will cover spouse and children. Okay, so it's well worth it. One of the other features you get, of course, is that you've got freedom of movement within the Schengen area. And another really quite important point to go with the D2s and the D7s is that after 5 years, you can apply for Portuguese passport and Portuguese citizenship. That could be quite useful for a lot of people, particularly for UK people with inheritance tax. And I'll come on to that at a later stage. So golden visas, quite simple. Now, non-habitual residence. Now, this has got nothing to do with living, residence, or non-residence. It's just a tax status. So in other words, non-habitual means you haven't been here before. That's really what it means. But here's the critical point, a really good point. Non-habitual residence is available to EU nationals and non-EU nationals, okay? So if you've got a D2 or a D7 and you're just coming in here to retire, you can get non-habitual residence. So it's a quite important factor, this. But there are just a couple of requirements. You must not have lived in Portugal in the previous 5 years. You must not have had NHR status before, and you have actually lived in Portugal for 183 days. Now, 183 days is basically a residence qualification. So to get tax residency, you need to be in Portugal for 183 days. Now, that's either in the tax year, which is January to December, or it can stretch over 2 calendar years. So if you are, let's say, coming down in, say, September, October, November, and then you carry on into the following year, that 183 days would then make you tax resident in that following year. Okay, it's very simple. Right, so again, the same types of documents are needed. Fiscal number, which you can get quite easily, as I've said before. Proof of address, you need to register with the Portuguese tax authority. It really is quite simple. But here's the advantage. The status lasts for 10 years. Okay, 10 years. Now, what that benefits you is that pensions derived from outside Portugal are only taxed at 10% for 10 years. Now, that's quite a significant concession and one well worth grabbing. Dividends, interest, royalties derived from outside Portugal are taxed at nil. So you can see that is a very favorable tax position and one you really should jump on, because going on to the next slide, where are we? Where are we? No. No, it's not moving.
Was it? Which slide are you after, Robert? Is it the?
What? No, next one. That's it. Right. No. Go back one. Sorry. That's it. Right. If you don't have NHR, you will be taxed at normal rates. And income tax in Portugal starts at 14 and then is banded right up to 48%. So the issue is, do you want to go to ordinary rates or do you want to go to NHR? Absolute no-brainer. If you are eligible for it, which most people are, you must really go for NHR. There are exceptions, but it is the primary factor, the primary source to look at. Capital gains tax down here is at 28%. That's quite chunky. About the same as the UK, really, but still quite chunky. But again, next point, no wealth tax. Absolutely not at all. Perfect. There is property tax on property valued at over 1.2 million euros in respect of joint ownership. But again, the actual rates are not excessive. VAT, that varies according to the actual item from 6 to 23%. Inheritance tax, there is no inheritance tax in Portugal, okay? But I'll explain a little bit later. That's not the end of it. Now, inheritance tax would largely apply to UK individuals, but there would be no Portuguese inheritance tax, but very likely there would be UK inheritance tax. So it's one to take on board. Okay, right. Financial and tax planning. Now, these are just a few ideas that you need to consider. Right, the first is, as I said earlier, UK financial advisors, independent financial advisors, are unable to advise clients in EU countries anymore. So if you're coming down here from Birmingham or Reading or wherever it is with your IFA in those places, he or she will no longer be able to advise you in Portugal once you become resident. UK pensions. Now, the issue here is the tax-free cash. You can take 25% of the fund in the UK tax-free. So if you've got 100,000 in your pot, you can take out 25,000 tax-free in the UK, but it's not tax-free down here in Portugal. Okay. So the critical thing, obviously, is to consider taking that lump sum before you get down here. There's no point in paying tax unnecessarily. So this is just one thing to consider. Also, you might want to consider transferring a UK pension to an international SIP or a QROP. That's worth a seminar in its own right, and it'll take forever to go through it. But it's just a box. It's something to think about. UK ISAs. If you've got a UK ISA, unless it's in cash, a cash ISA, it's taxed here in Portugal at 28%. So if you've got unit trusts in there, or you've got stocks and shares and they make a gain and you're resident in Portugal, you're going to have to pay tax at 28%. Not the best. UK investment bonds. Now, by and large, they are effectively tax-free in the UK, but they are not tax-free in Portugal. Okay, not tax-free in Portugal. Right, UK property. Now, this is one that often confuses people. If you have a property that you're renting out in the UK, or you're selling it and making a gain, tax is payable in the UK. So you pay income tax on the rent and you pay capital gains tax on the sale, even if you are or when you become Portugal resident. So all property taxed in the UK. Don't forget that. Irish pensions. Now, this is amazing. If you have what is called an ARF, which is, let's say, it is a pension income. If you have an ARF from an Irish pension and you're resident down here, you have to pay Irish tax on that pension. It's a very complicated subject, and my opinion, for what it's worth, is that if you are coming down here with an Irish pension, think about moving it out before you get here. Do not automatically go for the ARF. It's not the best idea. State pensions in the UK, Ireland, totally unaffected. They're all paid gross, so you don't have to worry about anything like that. Now, Portuguese compliant investment bonds. Now, these are very tax efficient vehicles based on Portuguese tax laws. That's why they're called compliant. They comply with Portuguese tax laws and they get very favorable tax treatment. So there's no capital gains tax to pay on the growth in your bond. Remember earlier, tax is at 28% on stocks and shares. Within the bond, nothing. But the beautiful thing is withdrawals, let's say, stroke income that you take from the bond. If you have NHR, here's the good news. If you have NHR, the tax is only 10% for 10 years, or even if you don't have NHR, you still get very favorable tax rates. It's easily the best vehicle to use down here to get tax efficient growth and income. UK inheritance tax. Now, this again is a massive subject. It's another topic I could spend a lot of time on. Without going into all the ins and outs of it, for Brits coming down here, it's almost certain that they are still going to be liable for UK inheritance tax, and in my opinion, for at least 5 years after arrival. Okay, so don't get on the plane and take off and land in Faro and Lisbon and think you're out of IHT, inheritance tax. Almost certainly you're not. Okay, I can advise on that. It's a very difficult, complicated subject. It looks easy, but believe you me, it isn't. The tax starts at £325,000, and it's 40% on any excess over that. And very simply, if you just think about property values in the UK, how many houses are worth £325,000? Thousands. So 325 is not a big amount of money. Right. Coming to the end now. Paperwork down here, to be blunt, is very tedious, it's very tiresome, and there's a ton of it. And of course, it's all in Portuguese, so you really must get agents, you must get lawyers, you must get accountants to work for you. Otherwise, you're going to be pulling out all your hair and you're going to have none left in a very short period of time. It's a very big point. We obviously work with lawyers and accountants who can help you with that. Figures that I've given, they're just for examples, but any financial planning or help or advice that you need, we're more than happy to give it. And finally, these are my details. So as I said earlier, if you would like a copy of these slides, then please just get in touch with me, drop me a line, drop me an email, and I'll send them on to you and answer any other further questions or points that you may have. So I think that's about it for me. Blimey. I've run over a little bit. Sorry about that. But I hope I've covered a lot of ground here, and I hope a lot of it made sense. So please do get in touch if there's anything you're not certain about. Thank you for your time.
Brilliant, Robert. Yeah, thank you very much as well. That was a very comprehensive overview. I know there's a lot of stuff to cover, and it is inevitable that we were sort of going to run over time. But that's really useful. It happens, Robert. But we have quite a few questions that have come through from clients that are joining us, guys. So thank you very much for typing in your questions. Try and get around to as many as possible. There have been a couple, Robert, that have been related to the D2 and D7 visa. There's one here from Adam Yardley asking if you're able to offer on a Portuguese property without the D2 or D7 visa.
Sorry, say that again.
Are you able to offer on a Portuguese property without a D2 or D7 visa?
Yeah, I think you can. Yeah.
You can.
Whether you do that or not, that's obviously to say down to you. But getting the D7, which is for most people, it does take a bit of time, and you're going to need it eventually, I would say.
Okay, fantastic. And I suppose you touched on it right at the end. I know it's quite a complex part of the process. In regards to, I suppose, the inheritance tax, I mean, what advice could you give quite quickly, I suppose, and quite concise on the best ways to really ensure that you're not getting taxed or overly taxed on inheritance?
It's such a big subject. I think what I would say is the assumption, if you're what is called a UK domicile, you are liable to inheritance tax. Domicile you get from your father at birth. So if you were born in the UK, father was UK national, you are a UK domicile. I always liken it to be a badge. So you carry it with you wherever you go. So if you move from the UK to Portugal, you're still a UK domicile. You're still liable. If you move to Spain, you are still a UK domicile. You can lose residency, change residency easily, but you can't change domicile. So if you are still a UK domicile, you're liable. There are a few plans available, which in my opinion are absolutely fantastic to avoid the tax. Everything will depend on commitment, how serious you take inheritance tax. It is a long process to avoid it, but it can be done.
Okay. All right, brilliant, Robert. Thanks very much for that. And we've just got a question through here from Paolo asking us to talk about how much taxes you need to pay if you buy a property as an investment. What would you pay in taxes as a non-resident generating a Portuguese rental income?
Right. If you're non-resident, yeah, you would still be taxed on the marginal rates, whatever that is. Okay, it's a quite specialist area. You would need to see an accountant for that, and we've got 2 or 3 who will gladly help. That is a very specialist area.
Okay. All right, Robert. And yes, if you would like to be put in touch with the specialist, Paolo, please do get in touch after this webinar with us. We've got a question here from Peter. He said, can you buy a property and then take residency later? He's a UK citizen who's buying residence in Switzerland.
Yes, I think you can. Again, that's a bit of a specialist area. I would have to be honest, I'd have to consult one of my contacts on that. I'm happy to do. Yeah, not a problem.
Yeah. Perfect. Yeah, do get in touch with us for the small specialised questions. And finally, Robert, if you could just wrap up and summarise why people, I suppose, should seek professional financial advice, and when they move to Portugal, and when's probably the best point in the process to actually get in touch with yourself.
Right. I would say 2 things about this. Imagine the UK to be a box. Okay, you've got both feet in the UK box. Now, if you come to Portugal, you need to get into the Portugal box. And a lot of people don't do that. They still relate everything to the UK. So ideally, of course, you need a foot in the UK box and you need a foot in the Portugal box. It takes you quite a bit of time to get your head around it because of the different tax rates, the different structures, the language. Everything is different. So what I would say is you've got to have an open mind. You've got to go with the flow. There's no point coming down here and thinking everything is the same as it was in the UK. It won't work. The second thing I would say is if you are coming down here and you've got, say, tax issues with capital gains tax, ISAs, investment bonds, pensions in the UK, blah, 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 blah. Get hold of us well before you get down here so that we can kind of give you some pointers, give you some ideas as to the best direction to take. It's like everything else. Early planning, as soon and as possible, the earlier the better.
Brilliant. Yeah, Robert, I couldn't agree more. So the more time you have for this, a complex journey of buying property overseas, I think it's always going to be beneficial. But yeah, thank you. I think that's all about all we have time for today.
Okay.
Robert, but yeah, it's been very insightful, and it's great tips and nuggets of advice throughout. We do obviously strongly recommend, and as Robert mentioned today, you do get in touch with and plan it directly and as early as possible within the process to discuss your individual requirements in more detail. And yeah, thank you to all the viewers for watching this session, whether or not you're watching it live or on demand. We wish you all the best with your move overseas. I do also have various other resources available to help you on your buying journey, including buying guides and other webinar recordings. So do take a look at our website. And yeah, thanks again, Robert, and thanks to everyone that joined.
No, brilliant.
And, yeah,
Well, thanks to you. Thanks for your time. Thanks for organising it, and thank you for everybody who's been listening. I hope you found it useful. And I say, don't forget, if you need anything, it doesn't matter how silly or how trivial you think it is. Please get in touch. No problems at all. Happy to help.
Brilliant. Yeah, I couldn't agree more. All right. Well, thank you very much, Robert. And yeah, we'll speak soon.
Okay, that's brilliant. Okay, good to see you.
Cheers. Bye-bye.
Bye.